Is real estate still the safest way to build wealth in 2025? Or is the housing bubble finally about to burst? With interest rates, inflation, and global uncertainty shaking the markets, the big question is, should you still put your money into property this year? Today, we're comparing the US, the UK, and Canada, three of the hottest housing markets in the world, to see which country is offering the best opportunities and which might be a trap. Welcome back to Cash Hold, the channel where we break down money, markets, and smart investing. If you want to grow wealth in 2025 without falling for hype, make sure to subscribe and join our community of smart investors. Now, let's dive in.
The U.S. market mortgage rates. After peaking above 7% in 2023, RATES are easing slightly, averaging around 6% to 6.5%. In early 2025, that's still high compared to the near 3% we saw during the pandemic boom. Affordability crisis. According to Realtor.com, the average U.S. home costs over 5x the median household income, making it the least affordable housing market in 40 years. Regional growth. States like Texas, Florida, Arizona, and North Carolina are seeing huge inbound migration, driving housing demand even with high rates. Rental demand. With many priced out of buying, rental demand is at record highs. Rents in cities like Austin, Miami, and Charlotte are growing faster than wages. Investor opportunity. Single-family rentals and multifamily apartments are outperforming flips. Investors who focus on cash flow over appreciation will benefit most. Risks. Potential recession in 2025 could slow demand. But housing inventory is still historically low, preventing a crash. Key takeaway. In the U.S., real estate is no longer about easy flipping. It's about holding long-term, targeting rental growth, and picking the right cities. The UK market house prices. After years of steep growth, UK house prices have slowed. Nationwide reported slight declines in 2023 to 24. In 2025, looks like a stabilization year. Interest rates. The Bank of England's base rate remains high at around 5%, keeping mortgage costs elevated. Many homeowners coming off cheap fixed-rate deals are struggling with payments. London versus regional cities. London remains expensive and stagnant. But regional markets like Manchester, Birmingham, and Liverpool are showing stronger rental yields and affordability. Buy-to-let market. Despite tax changes making it harder for landlords, rental demand is huge. The UK rental market is growing at its fastest pace in decades, especially in urban hubs. Foreign investment. Overseas buyers have slowed due to Brexit and high borrowing costs. But domestic investors are stepping into the gap. Risks. Economic uncertainty, wage stagnation, and government housing policy changes could weigh on prices. Key takeaway. The UK is best for buy-to-let strategies in regional cities. London is overpriced, but second-tier cities are offering solid rental yields. The Canadian market affordability crisis. Canada is one of the least affordable housing markets globally. In Vancouver, the average home costs more than 11x the median household income. Immigration pressure. With over 500,000 immigrants arriving yearly, demand for housing remains sky-high. This is keeping both purchase and rental prices inflated. Government intervention. Policies like the foreign buyer ban and higher taxes meaningfully slowed price growth. Demand far outstrips supply. Regional differences. Toronto and Vancouver are nearly impossible for first-time buyers, but smaller cities like Calgary, Edmonton, and Halifax are emerging as affordable alternatives. Rental market. Vacancy rates are near record lows. Rent growth in Toronto exceeded 9% year-over-year in 2024. Investors can benefit, but entry costs are high. Risks. If immigration slows or a recession hits, these inflated prices could face corrections. But so far, demand hasn't let up. Key takeaway. Canada remains a long-term bet, fueled by immigration, but the barrier to entry is high. Smart investors look beyond Toronto and Vancouver. Head-to-head comparison. Us best for rental growth plus diverse investment options. Inventory remains tight, supporting long-term value. UK's strongest opportunities in regional buy-to-let, especially with rental demand outpacing supply. Canada. High costs make entry tough, but immigration ensures long-term demand. Secondary cities may offer the best opportunities. Common trend. All three markets are shifting away from get-rich-quick flipping and toward cash flow and patient long-term investing. Investor strategies for 2025 focus on rental income first, appreciation second. Look at regional and secondary cities instead of only major metros. Use creative financing, partnerships, REITs, and fractional ownership to offset high interest rates. Diversify. Don't put all your money into one country or one type of property. Stay flexible. With elections in the US and UK and changing immigration in Canada, policies can shift markets quickly.
So, is real estate still a good investment in 2025? The answer is yes, but not in the old way. The days of buying cheap, flipping fast, and doubling your money are behind us. Today, success comes from patience, rental demand, and choosing the right location. But I want to hear from you. If you had $200,000 to invest in property today, would you buy in the US, the UK, or Canada? Drop your pick in the comments. I'll be responding to the best ones. And if you found this breakdown valuable, hit that like button, subscribe for more smart investing insights, and share this video with a friend who's thinking about buying property in 2025.